Jim Dilworth, your S1 mutual fund hires hedge fund managers to oversee the assets. Why is this a better way for people to invest?
Right. For years, hedge fund strategies have been in the hands of mostly high net worth and accredited investors. And so products like the S1 fund bring direct access to real hedge fund managers, institutional hedge fund managers via a mutual fund structure.
And how do you choose the managers for your fund?
Our selection process is based upon a manager's pedigree, their ability to manage risk, to manage volatility very well, and obviously we look for institutional quality managers who are managing institutional capital, not just retail capital.
And the fund's up around 4% or so year to date, but you're not trying to beat the index per se.
Correct. If you look at our fund performance on a risk-adjusted basis, we have been outperforming not only our peer group, but the HFRI and other hedge fund strategies in general.
Now, when you look at the holdings, there's a whole lot of agency bonds in there. There's a reason for that. Tell me what it is.
We, as part of a long-short equity strategy, we're required to hold collateral for our short positions, and that's what we use those agency bonds for.
There's also a whole lot of ETFs. Now, this changes over the course of a year, but how do you avoid overlap between the managers?
Right, so on the ETF point, we have significantly less ETF exposure than we did, say, last quarter. And in terms of looking at the overlap positions of our underlying managers, we look at a host of different technologies that we run and quantitative analysis, and so we real-time can monitor exposure level information on each of the managers.
So one of the core strengths of your fund is that you keep volatility very low. It's been a very low year for the VIX. It's been below 20 for most of the year. What are your expectations for 2013? We're going to have some more fun when it comes to volatility?
Yeah, that's a great point. We are focused on providing a low volatility solution to investors, which we think is unique. So our volatility profile has been extremely low. We would anticipate that going up over time. We're looking at with the fiscal cliff looming and everything else. Yes, we would anticipate it to be a very bumpy ride for 2013 for sure.